Morty, thank you very much for inviting me. I've been with Acorn for 11 years, and prior to that, I was an investment banker in the aerospace and defense segment. Acorn's a private equity fund that exclusively invests in aerospace, defense, and intelligence, and we're in the process of raising our fifth fund. We believe it's a very unique time to invest in this global industry segment. Looking at it in each of its segments, if we look at commercial aerospace, clearly with COVID, there's some distress in the segment at the moment. And we think that presents an opportunistic investment cycle. As you know, the structure of the industry is very concentrated with two OEMs, Boeing and Airbus. And there's about a 20,000 company supply chain that supports those two OEMs. Clearly, from an outlook perspective, it's important to try to realize when passenger traffic miles will start to grow again after a relatively precipitous decline in 2020. At the moment, there seems to be growth in the US. People expect growth in Europe to start, and Asia still seems to be stagnating somewhat. So various estimates are out there in terms of the growth that it takes to get back to 2019 levels. Some people say 2022, and we think it may get to that point, plus or minus 10%. Boeing and Airbus each have their individual problems. Obviously, the 737 MAX 8 issues are well known with Boeing, and of course, within Airbus, they do not have a wide-body product at the moment. So clearly, there's going to be some rationalization of the supply chain based on how the future deliveries of the two OEMs plan out over time. On the maintenance side, which planes are retired and which planes will be brought back into service is going to be the key factor there. And the important part is to be properly positioned in that supply chain for any investment. Clearly, there's an emphasis right now on cargo, but there will continue to be a wide range of opportunities in the supply chain, and that also includes engines as well. On the defense intelligence side, we could be potentially looking at flat defense spending, so it's important to pick the right segments for growth. Manned intelligence, surveillance, and reconnaissance was very attractive in the early 2000s, and we've had a number of successful investments in that segment. Clearly now, space, as Marty said, not only the launch side, but also sensors, communications, laser and optical, and offensive and defensive satellites will be important, along with strategic ISR, given the peer-to-peer focus of the defense establishment in terms of threats. And clearly UAVs, both platform UAVs, services, and defensive UAVs, counter UAVs as well. The commercial airspace distress situation has prompted the Department of Defense to look at various ways to shore up the supply chain. One of the programs is called Trusted Capital Markets. We're a cornerstone investor in that program. And essentially what that allows us to do is we see the Department of Defense priority investment segments in technology where they want to protect those companies from outside investment from the US. And we believe that probably in that sector, there's over 10,000 companies to look at. So overall, I think from a summary point of view, we believe both of these segments are exhibiting secular and some cyclical trends. And we believe that they will produce potentially a very good investment environment for this decade. So just a little bit about Acorn. Acorn has been an investor for over 15 years. We've raised and invested in 4 funds. Our style of investment is we're a classic LBO fund in the middle market. And we have manager co-invest with us in the transactions. We see over 200 deals a year. 70% of those are generated by our internal efforts. We make offers on somewhere between 20 and 30, and we're hoping to close 3 to 4 transactions per year, which has been our average over the last couple of years. We have deep relationships in the segment, and we're able to do detailed due diligence, especially on the defense side, given our security credentials. And we are ESG and European investor friendly in terms of the trends from both of those categories of investments. We've successfully bought, grown, and exited a diverse blend of portfolio companies, including cybersecurity, which is our business there. We exited this year at significant returns, counter UAVs, defense electronics, commercial and military aircraft MRO services, and also engineering services. If you look at my slide deck, the last 2 slides show performance. From a past performance perspective, our previous funds, funds 1, 2, and 3, as of the end of 2020, all produced over a 40% IRR return. Fund 4, which is a 2016 venture fund, but we did not really fully invest at that until in 2019, so that's only 1.5 years. That's showing about a 17% IRR at the moment. The reason that we had a relatively long investment period for Fund 4 was because we are very diligent on price, and we look exclusively for situations where we can add value in terms of an investor. From a relative performance perspective, if you look at the U.S. Aerospace and Defense ETF, stock symbol is ITA. We've mirrored our cash flows to that index, and so when we invest, we buy the index, and when we exit, we obviously sell the index. So at the end of 2020, we calculated, given the effects of the China-U.S. trade situation, 737 MAX 8 issues, and COVID, that we've generated an alpha of around 5% to the index. And clearly, again, that reflects a relatively short investment time period for Fund 4, which is about 1.5 years. And if you look at the overall return, it's around 9%. Thank you very much for your time.
Great, Joe. I've got some questions I'm going to ask you, so hopefully you can get some feedback on it. So give me 1 second here. Can you talk about the valuations in the space right now? Like, where are they, or where you guys play in the middle market? Are they thinking overvalued? Is it distressed, et cetera?
Well, turning to the commercial airspace segment for the moment, distressed assets, we would characterize distressed from our perspective as ones with revenue but not much profitability. Those multiples are depressed on the manufacturing side, given the uncertainty in the supply chain. So they're probably, I would say, mid-single-digit multiples of EBITDA. On the services side, tends to be a little bit higher, but certainly under double-digit multiples. But clearly, that's depending on how fast the commercial airlines bring their aircraft back into production and into service, and how much requirement they have for spare parts. But as you know, even an aircraft sitting on a ramp still needs maintenance. On the defense side, last year, 2019, because there was not much activity in commercial aerospace, there was a lot of rotation into the defense investment that drew a lot of new entrants, and that actually pushed some of the multiples up a little bit higher, including some that reached double-digit EBITDA multiples.
Can you talk about the duration of the fund investment, and if typically how long does it take to get to an exit?
Sure. Our earlier funds tended to be a little bit longer in terms of duration, in terms of our duration of investments, and I think our average investment time was around 7 years. In Fund 4, however, we're targeting a more like a 5-year environment, and the first exit out of that was actually at the 3.5-year mark, which was a cybersecurity business that I mentioned earlier. We look to be investing Fund 5 probably over the next couple of years, and we would estimate that the life of those assets would be somewhere around 5 years.
So Fund 4 was more of a venture fund, and Fund 5 was a private equity fund?
No, Fund 4 was a classic LBO fund as well.
Got it, okay. So let me ask you a question, because I think it's kind of a nuance here in your page 6, when you talk about the growth IRR of the fund. So when you are discussing the gross IRR on Fund 4, it's because there's non-realized gains. Is that correct?
Correct.
But you don't really put that into the average.
Correct. There's only been one realization out of Fund 4.
Got it. Exactly. I think that's really an important clarification for the audience. So you might want to just say it one more time. Hold on a second. Here, other questions. I have a question. Oh, question here. Yeah, great presentation, Robert.
Thank you.
And congratulations on exiting the cybersecurity.
Thank you.
investment. Do you see additional opportunities in cybersecurity, and are you actually looking for?
Yes, that investment was actually in a section of the market that dealt with secure communications within the government, and so modification of various OEM products to deal with the security problems associated around computer screens and the like. Where we see that there's a potential for future development is in mobile phones. And actually, as part of that business, we did have a phone that was being tested up to the secure level. But we were also able to take that to the top secret level with open coding. So I think we see that that's perhaps a very attractive area to grow in the defense area, because there are probably somewhere around 3 million phones within the DoD, Department of State, military, that are actually secure phones, and different requirements. Obviously, people that are out in the field have different requirements than people that are in offices. And I think what you will see is a trend much more away from secure phones onto desks, some kind of a mobile device such as that.
Thank you very much. So can you talk about your investment blend? Is your investment blend all domestic, or do you do any international?
No, we do international. At the moment, we have a maintenance business, MRO business, parts business in the UK. In the past, we've also had composite manufacturing businesses in the UK as well. So we do have a global perspective on the industry, and in fact, it is a global industry, as you know.
So the space ecosystem is kind of, in many respects, nascent. Can you talk about like any perceived growth you might see in that, or opportunities you may see? Because obviously, as you said, service providers, people who provide innovation around the new ability to go to space, are growing pretty rapidly.
Yeah. So if you look at the primarily strategic requirement of space, it's really intelligence, surveillance, and reconnaissance. So in the past, that capability was provided by manned and unmanned aircraft to tactical troops on the ground. The trend now is to migrate that to a space-based platform. And the ultimate goal is, I think, to have the troops on the ground be able to communicate directly with satellites. So clearly there's that communication environment where you need to have the UAVs, the manned platforms, the satellite platforms all talking together. So that's a communication issue that involves not only laser communications, but also optical communications. So that's one segment. Second segment is the sensor segment, which again is focused on lasers as well as optical sensors that would be carried on the satellite. And the third is clearly the satellite environment, and this is now being focused on microsatellites, both from an offensive and defensive point of view, And we have looked at opportunities in all three of those sectors, but have yet to make an investment.
Great. And there was another question here about 2023 Air Force program for flying cars. Do you know anything about that, or is that something real? Or?
That's not something that we have looked at, although there are certainly a number of development projects out there with VTOL aircraft. The key thing about that is how they're powered, whether it's electrical power, which is how everybody's looking at the moment. But I think the key thing will be is how that develops is the ability of those platforms to carry weight, which has always been a key objective. And so how they develop will be able to will depend on how weight effective the sensors can be designed.
Perfect. Do you have any closing remarks? We've got a couple minutes left. Do you want to make closing remarks? Like what are the things that people should take away from your presentation, as well as your funds and et cetera?
I think is first of all that we're a very focused fund, and we have a successful track record across the broad spectrum of different industry segments. Secondly, is that we believe that the environment now represents an environment of significant opportunity, given what happened on the commercial aerospace side and the knock-on effects in the defense, and also the changing defense strategies. And we believe that this environment will continue to provide attractive investment opportunities, certainly over the next couple of years as those factors on